Hi guys, I'm Harry Yotis. I've been a professional trader for 20 years now. Started way back in 2005 working for National Bank Financial. And for the past 10 years, I've been trading my own account. And it's been going pretty good ever since. So let's talk about today, Wednesday, Fed Day. Wednesday, the 10th of December, 2025. Fed Day, big news of the day is that Jerome Powell in the Fed looks like he wants to create a Santa Claus rally by cutting 25 basis points. And what I think is the most important part of that speech today is the restarting of QE, basically. He's going to buy bonds, increase the reserve accounts, wanting to deal with the repo madness, if you will. So that's the big news of the day. We'll get to it shortly. First, we'll talk about the S&P 500. This is the S&P 500. We always like to talk about the market first because so goeth the market, so goeth our stocks. Okay, so as you can see, we start with the technical analysis. We've been hovering around this breakout point of a double bottom breakout of the neckline here at 685. Up, down, and today, Fed Day, we got a big move above it, okay? So we are bullish still. Looks like we're going to go into the highs and break out into the highs. It's still premature. However, given what was said today on the Fed Day, I'm pretty confident that we're going to keep going higher, that this candle isn't a fake out, but you never know. We have to see going forward because the real move is revealed in 2, 3, 4 days from now, okay? But this is very, very encouraging. So we can bring out the moving averages, the 50, well above the 50, we're doing very, very well. Okay, we don't even have to look at that. The technical picture is bullish, and we closed above the 685. Okay, we also have the technicals here, which is I guess the stochastics. The RSI is still in the middle of its range. Plenty of fuel to go even higher. And if you look here, where is it here? Yeah, if we can draw these past 3 days here, just look at this. Forgive my drawings, but if you can look at these 3 past days here, this is a very bullish configuration on the short-term basis. If you look at the picture here of bullish reversal candlestick patterns, you'll see that this pattern reflects a bullish spinning top, or even like a morning star. It's like a big down day followed by let's say a small consolidation update and then a big update. This is what this looks like to me. So you have a lot of technical indicators, a lot of short-term moves and longer-term technical picture telling us that this is a bullish configuration. Okay, so let's get rid of this drawing. Just wanted to make it clear for everyone to see. So yes, technicals bullish. So let's get to the big news of the day. Of course, it's Jerome Powell. Fed cuts rates for the 3rd time, but Powell signals a higher bar for further cuts. Okay, we're getting articles that are, a little bit hawkish, even though for me personally, I listened to the press conference live, and he sounded very dovish, especially with QE. But we're getting articles here that say Fed cuts rates for the 3rd time, but Powell signals high bar for future cuts. This is just saying that going forward, Powell wasn't sure that he was going to cut more, okay? And if you can see from the FedWatch tool here, for the January next year, there's like a 78% chance that he stays pat at 3.5% short Fed funds rate. March as well, like 52% chance of no cut. We get into April tax season where there's a slight edge of a 25 basis point cut. Okay, we're going to have to go even further to solidify that. But you can't go more than 3 months ahead. So basically, the market thinks that Powell is going to cut as of today. He's going to cut again in April. So 3 months of pauses, okay? Yet, the market ripped. Why? Why did the market rip? Because it's like one and done almost? No, because buried in this, like I mentioned, we had 2 types of articles. This type of article here was very, very hawkish because you had to go all the way till the end here to get the key, which I think is the key on this press conference. Still, despite signs that the road for rate cuts ahead will be paved with uncertainty, very hawkish, amid a divided Fed. It wasn't really divided. It was like only 3 dissented, 9 were with him. So 3/4 were with him. So the central bank teed up a dovish offering, announcing that it would be buying treasury securities to address concerns about the overnight funding markets. They treated this as an afterthought, okay? Whereas in this other article that says from Financial Juice, stocks and bonds rally as Fed delivers third cut. And it was in the third paragraph that they brought up quarter-point cut in federal funds rate together with the authorization of new treasury purchases to replenish bank reserve help traders to look beyond a minor lowering of expectations. So this is the big news, I think, of the day, the key takeaway, and why I think this SPY move is going to be sustainable is that the Fed announced QE. In basically, they're buying back bonds, and it's not going to be small. It's going to be relatively solid. And he also mentioned in the press conference that it's going to be this way until at least tax season in April. So you have 3 months of this, 3 months of like not QE, let's say. So to me, that's very, very bullish. Okay, and they're doing it because of the repo market. The repo market is the higher the repo market, basically saying that the bank sector overall demands more cash, okay, more reserves. Whereas the reverse repo is a demand for treasuries, not cash. They want to like really buy treasuries because rates are high. So when going into repo and really into the repo market and it goes higher and higher, you can pretty much say that the higher the repo market goes, the more demand for cash. They're starving for liquidity in the system. Okay? But this reminds me of what happened with the regional bank crisis. Do you remember that in 2023? The regional bank ETF is called CRE. Okay, but if you go all the way back to like here, March of 2023, there was a crash in the regional banks right here. There was a crash because the regional banks were getting killed because they needed liquidity, and a couple of in the West Coast were going belly up. So the Fed had to step in for, to prop them up. And it happened very, very quickly. If you look at SPY during this time of March 2023, we teed it up right here. You can see that in March, it actually went down, but only for like a week. Okay, very tough to see. Because in 2023, we started coming back, okay? Not really, like if you look carefully, we were still coming out of this like recessionary 2022 period where the market fell 20%. We're coming out of it. So this spooked the markets. But the Fed papered it over very quickly, and then the market resumed its uptrend. This is what I think will happen in the SPY going forward if we bring it back into today, okay? I think the Fed is going to paper over this market and it's going to go much higher. And reserves, increasing reserves, doesn't really have an effect on inflation. It has an effect on asset prices. So that's why I think asset prices are going to go up more so than anything else. Okay, so that's my takeaway on the big Fed news, is that it's pretty stimulative for asset prices, and this was a dovish meeting. Okay, so I suspect that this candle will hold and keep going forward. I suspect this short-term bullishness and this long-term bullish trend will continue going forward simply because of that observation. Okay, so what else happened today? Let's talk about some things that I noticed. Well, let's keep up to date on our singles. Okay, remember we did a single on Microsoft. Okay, we did a single when it hit. We went for a single, meaning that we're doing these short-term trades that'll pick up some points here or there. Okay, it's not a really a big swing trading move. We expect to hold it for maybe 3 to 5 days. And we entered a single by when Microsoft hit this long-term support. And the single that we entered was a short put spread. Okay, and the reason we did it was because as the market was coming down, the premiums were relatively high on options, so we decided to short some puts. Okay, and we got out of it in 2-3 days here. We re-entered it around there when it tried to retest. We were looking good yesterday, but today Microsoft fell down. However, they're deep out of the money puts, so we still have a chance with it to come back. Okay, and as you can see, we got out of this fairly quickly because as the market went up, the volatility got crushed. Okay, like VIX, see, as the market went up, volatility here went down. Okay, and this decrease in the VIX, quick decrease in the VIX, resulted in us exiting the trade very quickly. And if you recall, in SPY, let's get rid of this Fed day thing. We get it. Okay, as you recall with SPY, we were happy that on Monday and Tuesday pre-Fed it was going down because it set it up for this. It set up a great move for SPY to go up. And as you can see, as this was going down, as SPY was going down, the VIX shot up a bit. Okay, so look, the VIX for the past 2 days shot up. Yes, today got crushed, but that's the point. As we entered here, Microsoft and CrowdStrike, we entered two singles here, and with the crush in VIX, we expected our put options to fall in value, and since we shorted them, we covered them at a great price. Okay, as the VIX was coming down, the put option price was coming down, and our short was going in the money. Okay, so for Microsoft, unfortunately, it fell down today, so we didn't get a chance to get out. But as mentioned before, we had another single in CrowdStrike, and as this lift, we entered it around here, and as the VIX got crushed today and the market went up, we exited here. Okay, so literally we're in it for 2-3 days, and we realized 82% of the total profit that we can because we shorted out of the money puts here, put spreads. So we covered this single. So we have this in the books. We have one Microsoft single booked here. So we have two singles booked, and we're waiting to book this one. However, today we entered a new one. Since we booked the CrowdStrike, I decided to enter a Tesla trade right about here. Okay, around when it was around 449, Tesla's at 451 now. Okay, so I entered a put spread here, out of the money put spread. Okay, because I think that Tesla will go up with the market, and it announced pretty good news this week, today, with its self-driving vehicle technology. So I expect, rolling out of covering the CrowdStrike put and entering these puts, I expect this to be a winner as well. So so far we're batting 100 on our singles trades, which brings us with Tesla to the other big news of the day, which was LYFT. We still have our trade on LYFT. LYFT got crushed today. I don't know why. Okay, as did Uber. Boom. Okay, apparently it's because my friend helped me out here on X. My friend Clark W. pointed out to me that Waymo robotaxis surpassed 40 billion paid rides in 2025. So this is probably the reason why, Waymo and Google's technology is beating, I guess, LYFT and Uber. This is Uber, and let's go to LYFT. This is our trade. So they took a hit, okay? They recovered a bit at the end of the day as the market went up, but it wasn't just the Waymo robotaxi. We also had the Tesla. Like if you look at Elon Musk here, he goes.
It's pretty much sold at this point. So there will be Tesla robotaxis operating in Boston with no one in them, not even anyone in the passenger seat, in about 3 weeks. Unsupervised is.
So basically, good news, unsupervised Tesla full self-driving is, he says, Elon says it's pretty much solved. So I guess this is a 1-2 punch, the robo-taxis for Waymo and the Tesla FSB technology is probably the reason why LYFT and Uber went down today. We'll see how this regulates itself going forward. We're still long here. But we'll see. We have to keep an eye on it. So those were the big news of the day. Let's recap. We have our LYFT Uber drop today. We have our singles. CrowdStrike, we covered it at up 82%, 82.5% of total realized gain out of the total 100%. Microsoft, still open on the single here. We covered one. We're still open here. And we just entered a new singles trade by selling puts on Tesla today. Okay? And for the market, bullish. Bullish. We have a reversal bullish short-term pattern here. The Fed is very, very bullish with the QE announcement, basically. Not really the rate cut, but the QE is what should support asset prices going forward. So that's it. Those are the big news of the day. So looking forward to tomorrow and see if this continuation play goes. Thanks, guys. And if you like what you heard, just like and subscribe. And, of course, comment below, and I will get to the comments as soon as I can. So take care, guys.